If you have $10,000 sitting in a savings account at Chase or Bank of America or Wells Fargo, you earned $1 last year. $1 on $10,000 because those banks pay 0.01% interest. That is the national average savings rate. Meanwhile, a different type of account at a different type of bank pays 4% on the same $10,000. That is $400 a year. Same money, same FDIC insurance, same safety, $1 versus $400, and most Americans are still earning the one. In the next few minutes, I will explain what a high-yield savings account is, why it pays 40 to 400 times more than your current bank, and how to open one in about 10 minutes. And there is one risk. One thing most people worry about with online banks, that is actually not a risk at all. I will explain why near the end, but first, let me show you what keeping money in the wrong account cost Mike. Mike is 33, delivery driver in Memphis, makes $42,000 a year. 3 years ago. He started building an emergency fund. He opened a savings account at the bank where he has his checking, a big national bank. Over 3 years, he saved $11,000. Consistently, every paycheck. A little at a time. He felt proud. Then a friend asked him what interest rate he was earning. Mike checked. 0.01%. In 3 years, his $11,000 earned him $3.30 in interest. $3 in 3 years. If he had put that same money in a high-yield savings account paying 4%, he would have earned approximately $940. Mike left $937 on the table because nobody told him there was a better option. At the same bank he already trusted. A high-yield savings account is a regular savings account. Same FDIC insurance, same federal protection up to $250,000. Same ability to withdraw your money whenever you want. The only difference? The interest rate. Traditional big banks, Chase, Bank of America, Wells Fargo, pay an average of 0.01%. Some pay as high as 0.38%. That is the national average. High-yield savings account, offered mostly by online banks. Pay around 4% right now. Some pay as high as 5% with conditions. Why the difference? Big banks have thousands of physical branches, employees, real estate, ATMs. Those cost billions of dollars to operate. They do not need to pay you high interest because they already have your money. Online banks have no branches, lower overhead, fewer costs. They pass those savings to you as higher interest rates. That is the entire explanation. No trick, no catch, just a different business model. Here is what the difference looks like on real money. $10,000 in a traditional savings at 0.01% earns $1 per year. $10,000 in a HYSA at 4% earns $400 per year. After 5 years, traditional $5 earned. HYSA, over $2,100 earned. Same $10,000, same safety, over $2,000 difference. After 10 years, traditional $10. HYSA, over $4,800. Your money earned nearly $5,000 just by being in a different account while you did nothing. Here is the question nobody asks. If HYSA accounts pay 4%, why does your bank still pay 0.01? Because they do not have to pay more. Big banks have over 100 million customers combined. Those customers do not leave because switching feels hard, even though it is not. Your bank takes your money, lends it out at 7 to 23%, and pays you 0.01. They earn 7 to 23% on your deposits and give you back 1/100th of 1%. That spread, the gap between what they earn and what they pay you, is how banks made record profits in recent years. Your low interest rate is not an accident. It is their business model, and it works because most people never check. Now, the concern I mentioned at the beginning, most people worry, is an online bank safe? The answer is yes, as long as it is FDIC insured. FDIC insurance covers your deposits up to $250,000 per depositor per institution. This is the exact same protection as Chase. Bank of America, Wells Fargo. If the bank fails, the federal government guarantees your money, up to $250,000. Every major high-yield savings account is FDIC insured. Look for the FDIC logo on the bank's website before opening. The only difference is there is no physical branch to walk into. You manage your account from your phone or computer. If you already do mobile banking with your current bank, the experience is identical. You are just earning 40 times more interest. Now, let me show you the full cost of Mike's decision. Mike kept $11,000 in a traditional savings for 3 years. He earned $3.30, but that is not the whole picture. During those 3 years, inflation averaged about 3.2%. That means the purchasing power of his $11,000 dropped by roughly $1,056. He earned $3. He lost $1,056 in purchasing power. His savings account did not grow his money, it shrank it by over $1,000. If he had used a HYSA at 4%, he would have earned $940, which would have nearly offset the inflation loss. $3 earned, $1,000 lost, or $940 earned, inflation nearly neutralized. That is the real cost of keeping cash in the wrong account. It is not just that you earn less, it is that you are losing purchasing power every single day. If you have cash sitting in a traditional savings account right now, this math is running against you. Here's how to set one up. 3 steps. Step 1. Pick an FDIC-insured online bank. Look for APY above 4% with no monthly fees and no minimum balance. Takes about 5 minutes of comparison. Banks change rates often, so compare current rates before opening. Step 2. Open the account online. You will need your social security number, a government ID, and your current bank info. Most applications take under 10 minutes. Some approve you instantly. Step 3. Link your checking account and set up automatic transfers. Move your emergency fund or savings from your current bank. Set up an automatic transfer, even $50 per paycheck. The transfer usually takes 1 to 2 business days. Total setup time, about 15 to 20 minutes. Expected result, $400 per year on every $10,000 saved instead of 1. Mike opened a HYSA 2 months ago, moved his $11,000 over, set up a $100 automatic transfer every 2 weeks. In the first 2 months, he earned approximately $73 in interest, more in 2 months than he earned in 3 years at his old bank. By the end of this year, he will earn over $460 on money that was already sitting there, doing nothing. Same money, same safety, different account, $460. Your big bank is earning 23% on your deposits and paying you 1/100th of 1%. That gap is their profit and your loss. A high-yield savings account does not make you rich, but it stops your cash from losing value while it sits there. Same FDIC insurance, same safety, same access, 40 times the interest. Where is your cash sitting right now? Tell me in the comments. Drop big bank if your savings is at Chase, BOA, Wells Fargo, or similar. Drop HYSA if you already moved your money. Drop moving if this video made you switch, or drop how much in your savings amount, and I will tell you what you would earn at 4%. My emergency fund video is on your screen right now, and my 5 bank accounts video shows the complete system. Both on your screen. Subscribe to Wealth Storyline. Every week we break down the money systems most Americans were never taught. See you there. This video is for educational and entertainment purposes only and should not be considered financial advice. Rates change frequently. Compare current APYs before opening any account.